Have you ever opened your car insurance renewal notice and felt a wave of frustration? It's a common experience for many of us. You see your rates have gone up even though you haven't had an accident. No tickets, no claims, just a higher bill. It doesn't seem fair, does it? You might wonder why you're being penalized for being a good driver. You did everything right, yet you're paying more. We've all been there. It's a frustrating and confusing situation. Let's uncover why this happens and what you can do about it. There are several factors at play. We're going to dive into the world of car insurance. Understanding the intricacies can help you navigate this complex landscape. It's important to understand how rates are determined. Factors like your location, age, and even credit score can influence your premiums. Sometimes, factors beyond your control can impact what you pay. Economic conditions, natural disasters, and even changes in the insurance market can affect your rates. But knowledge is power. Once you understand the system, you can find ways to save money. From shopping around for better rates to adjusting your coverage, there are steps you can take to manage your car insurance costs effectively. Many people believe that if they're not at fault in an accident, their insurance rates won't go up. Unfortunately, that's not always true. It's a common misconception. The truth is more complicated. Insurance companies don't just look at individual cases, they consider a much larger picture. They look at trends across all their insured drivers. This helps them assess overall risk. Think of car insurance as a big swimming pool. Imagine this pool as a place where everyone who buys insurance contributes their money. This collective fund is what we call the risk pool. Everyone contributes money to the pool. These are your premiums. Each person's contribution helps to build a substantial fund that can be used when needed. When someone has an accident, money from the pool covers the costs. This ensures that no single person has to bear the financial burden alone. But here's the catch. If there are more accidents, the pool needs more money to cover the claims. This means that the overall risk has increased. This is where risk pools come in. By grouping people together based on similar risk factors, insurance companies can manage and predict the likelihood of claims more effectively. Insurance companies group drivers together based on similar risk factors. These factors help determine how much each person should pay into the pool. These factors can include age, which can indicate driving experience and risk levels. Location, as some areas have higher accident rates than others. Driving history, which shows past behavior on the road. And even the type of car you drive, since some vehicles are more likely to be involved in accidents or cost more to repair. If the risk in your pool increases, your rates might go up, even if you haven't personally had an accident. This is because the pool needs to have enough funds to cover potential claims from everyone in the group. Section 4. Why insurers pay even when you're not at fault. You might be wondering why your insurer pays anything if you weren't at fault. Wouldn't it be easier to just let the other driver's insurance handle it? Well, it's not always that simple. Sometimes determining fault takes time. Your insurer might pay up front to get you back on the road quickly. This is where subrogation comes in. Subrogation means your insurance company will try to recover the money they paid from the at-fault driver's insurance. Think of it like getting reimbursed. However, subrogation can take time and it's not always successful. Section 5. The impact of claims history and state laws. Even if you're not at fault, having a claim on your record can still impact your rates. Insurance companies view drivers with a history of claims as higher risk. They might assume you're more likely to be involved in future accidents. State laws also play a role. Some states have laws that limit how much insurance companies can raise rates after a no-fault accident. Other states have different regulations. It's important to understand the laws in your state. Section 6. Taking control. Tips for mitigating rate hikes. The good news is that you're not powerless. There are several strategies you can employ to keep your car insurance rates manageable, even in the face of potential hikes. Here are a few tips to help you mitigate rate hikes. First, ask about accident forgiveness. Some insurance companies offer accident forgiveness programs. These programs can be a lifesaver if you find yourself in an unfortunate situation. This means your rates won't go up after your first accident, even if you're at fault. It's a great way to avoid sudden spikes in your premiums. Another effective strategy is to shop around for the best rates. Insurance companies often have different pricing models and discounts. Don't be afraid to compare quotes from different insurance companies. You might find a better deal that offers the same or even better coverage. You might be surprised at the savings you can find. Additionally, it's crucial to understand your state laws. Each state has different rules about car insurance. These laws can affect everything from the minimum coverage required to how claims are handled. Familiarize yourself with the laws in your state so you know your rights. This knowledge can help you avoid unnecessary costs and ensure you're adequately covered. Maintaining a good driving record is another key factor. This might seem obvious, but the best way to keep your rates low is to avoid accidents and traffic violations. Safe driving habits not only protect you and others on the road but also keep your insurance premiums in check. Remember, knowledge is power. By understanding how car insurance works, you can make informed decisions that protect your wallet. Educate yourself on the different types of coverage, deductibles, and discounts available. Don't be afraid to ask questions, shop around, and advocate for yourself. Being proactive and informed can make a significant difference in managing your car insurance costs effectively.